to relate to it. She said, Tofiakwa, which over means never, like, or something like over my dead body kind of thing. And it was almost like, oh, do you want to kill me? Do you want me to die? Is that what you're saying? If I get life insurance, it means I'm going to die straight away, or something like that. Like, it's this superstition. So there is a specific, unfortunate mindset when it comes to products like life insurance.
Hello and welcome to the Woke Finance Podcast, the podcast discussing all things finance and all things finance related. It's your boy Peter and I'm with my co-host, my bro Jax. How are you today?
Yes, yes, Peter. I'm doing very well. At the point of recording this episode, we have come to the end of the Premier League football season, for which my team, Manchester United Football Club, didn't really perform very well. So I'm at a point of reflection, but also I'm just very happy to see the end of what has been an abysmal season.
Absolutely abysmal.
Oh yeah, yeah. Rub
Absolutely
it in, won't you?
abysmal. I mean, my shout out to my team, Arsenal. It wasn't great by the standards we've set in the last 2, 3 years. It was actually not great. But you know how they say, as we've been saying for the last 20 years, here's to next season. Oh gosh, but yeah, massive shout out to you, shout out to our listeners. I've got hay fever symptoms, so if my nose, well, if I sound even more congested than usual, my apologies to our listeners. But you're just gonna have to deal with it today because we've got a juicy episode in store for you. So wherever you are in the world, sit back, relax, and tune in or stay tuned in. So, Jax, today we're going to be focusing on insurance. We've
Mm.
spoken about insurance a couple of times on the podcast over the last few years, but just going to take a bit of a deeper dive into insurance. And we're going to be focusing on, in particular, for our listeners, stay tuned in, but at some point we're going to be talking on the three insurance products that we feel everyone should at the very least consider. So please do stay tuned for that. But Jackson, in general, let's just set the context a bit.
Yeah.
For some listeners, everyone's heard of insurance, but if I'm honest, before I actually took out insurance products, I kind of had an idea, but I didn't really know too much about what it actually means. So let's talk about the bigger picture. What's actually wrong when it comes to insurance? What is it? And yeah, let's just set the scene a bit.
Yeah, so insurance is one of those topic areas that many people don't really dive into when we're talking about, the whole journey of wealth building or financial literacy. But actually, if you speak to any professional regulated financial planner, they will tell you that actually insurance products form the foundation of everybody's personal finances. And it is essentially a type of protection, right? It's a way to protect your finances, protect your wealth, etc. There are different types of insurance products, and we will dive into three that we believe are often the bedrock of insurance and protection. But essentially, what happens is most people, when we look at the backdrop, most people are what we call underinsured. And what we mean by being underinsured means that most people do not have the right level of cover to protect them if they were unable to, let's say, work due to some sort of incapacity, due to ill health, due to some sort of health condition, or unfortunately due to death. And so, again, it's one of those topic areas that is often difficult to speak about sometimes. And often, when it comes to insurance products, most people, in terms of actually funding it, you need to pay premiums.
Mm.
Premiums are essentially how much you pay per month to actually have the policy. And the reason, I'll say the main reason why people don't really love insurance products or don't really consider it as much, is also because it's one of those things that you pay for it and you hope that you never use it.
Yeah.
You pay for it, you hope that it never actually comes into play. So that's one of the reasons why. And also, look, the truth of the matter is many people just don't understand what life insurance, for example, is or other insurance products. But there are types of protection that people do have in place in the sense that a lot of people are over reliant on the state to protect them when things are going wrong in terms of their health or basically being unable to generate an income. So we have things like here in the UK, we've got things like job seekers allowance. We've got universal credit. We've got something called ESA, employment support allowances. We've got statutory sick pay for those that are employed. They may have that kind of thing in place as well. So there are things in place that people have heard of and they unfortunately believe that it is enough. But the truth
Mm.
of the matter is there is an over-reliance on these products to support you and your family should you be unable to work due to some sort of ill health, disability, incapacity, health condition, or death.
And it's interesting because again, until I actually started taking out products, um I didn't really when it comes to things like statutory sick pay and things like that, and you just see in the contract when you join a new
Yeah.
job, right? But you didn't actually really look into it and really do the calculations, and then you start to realize, yeah, perhaps, as I continue to build my life, family, etc., this actually wouldn't really be enough if it does come to using it. And I think that mindset, and it will be good to understand what is some of the mindsets that we should really be adopting when it comes to insurance, because that mindset of hoping I never have to use it again, that can be limiting you in actually seeking the right level and cover of when it comes to insurance.
Well, absolutely, Peter. I think the issue is a lot of people have the mentality of, and I'll say this in speech marks, it won't happen to me.
Mm.
Right? So many people live life hoping that they will kind of get lucky, or in other words, they will not be unlucky to contract, let's say, some sort of health condition that stops them from generating an income. But I submit to most people to be intentional, and to understand what it means to actually love your family, which is to
Wow,
protect
that's
your
deep
family.
though. Yeah, yeah,
Yeah.
yeah,
And so look, just imagine a situation where you are the main breadwinner or even a supporting breadwinner in your household. And you for some reason, contract an illness that stops you from being able to work. Right. So it could be anything, it could be some sort of disability, just anything that causes you not to be able to do your job the way you used to.
yeah. Or God forbid
Um,
an accident.
Yes, yeah, absolutely. Anything of that kind. And for that reason, you are unable to do your job for a prolonged period of time, right? The question is, where does the income come from? How do you support your family? How do you feed your children? Right? As I said, it's one of those insurance products. It's one of those things that you don't know you need it until you absolutely desperately need it. And so I think there's a level of responsibility, especially if you are someone who has a family, to have these products in place. And I would submit to you that actually, aside from people that are employed that may have some of these benefits that can support, if you are self-employed, then it's even more of an issue.
Mm.
I would say if you are self-employed, then most definitely it's almost non-negotiable to be intentional about getting some sort of policy cover, whether it is to cover you if you fall ill, are unable to do your job, or unfortunately if you pass on.
Yeah, and I think with the self-employed, it's similar to when it comes to things like pensions, right? If you're self-employed and let's say you're earning, a decent day rate or whatever you're contracting, etc., it's very easy to see all of that money come in, but not focus on the other things like insurance, like pensions and stuff,
Well, absolutely, yeah,
because it's not
it's
automated,
it's not
particularly the pension
automated.
bit. Yeah, yeah, yeah,
Yeah,
yeah.
yeah. So options since April 2012, options became they joined something called auto enrollment. Auto enrollment basically means that the government says to companies, hey, if someone's over the age of 22 and they earn over £10,000, then they should be automatically enrolled into your pension scheme. And you need a pension scheme for these people, right? So even the government really realizes that most people actually are not intentional about saving and investing for their future. And so that's why they created that. And yes, absolutely. If you're self-employed, you have to figure this stuff out yourself, right? That's the risk that you take when you have to do things, you become independent. You have to be more intentional about actually putting things in place so that you are protected should you not be able to generate the income that you're able to generate today.
Mm,
Especially if you have things like debt, right? So if you've got like a mortgage, Peter, if you've got a mortgage, which is often, well, it is the biggest cost for most households, rent or mortgage, and you're unable to work, well, who pays that mortgage?
mm,
And we know the risk of not being able to keep up with your payments
mm.
for a prolonged period of time. Your house will get repossessed. So we have to think about how can we protect ourselves and our families from this actually taking place.
And I guess when it comes to things like mortgage, yes, generally some people can take out a mortgage term for anything between, 25 years, even up to 35 years these days. I've even heard 40, but anyway, that's another story for another day. But, if you don't have insurance to protect you against, let's say you can't pay your mortgage, you can't make your mortgage payments due to some of the examples we've given, you're basically saying, I know for a fact that at least over for the next 30 years, nothing is going to happen to me. There's not going to be a time when I'm not able to. That's basically, in short, what you're saying. Or I have other alternative ways of making those payments, essentially.
Absolutely, absolutely. So you're almost banking on the fact that nothing will happen to you for the next
Hmm.
30 years or so. Yeah, absolutely.
Yeah.
And you rightly did say that actually the other side is you maybe be able to bank on some sort of a resource to be able to fund your liabilities should
Mm.
you not be able to actually generate that income yourself. Absolutely.
Mm. Now, I did say at the beginning of this episode, we're going to talk about what are some of the, well, in particular, free insurance products that everyone should consider. But before we do that, I did want to ask, I mean, you said, Jax, that most people are uninsured, sorry, are underinsured.
Yeah,
Underinsured, that's
yeah.
the key term. In your experience, all based on what you've seen in terms of data and research, etc., are there particular groups, communities that maybe are less insured than others?
I think you know the answer to
I
that.
still got an ask, man. I still got an
Yeah,
ask.
yeah, yeah. So you do find probably more on the kind of class that you're in. So when we talk about things like social mobility, etc., those on a lower social uh is it ranking? I don't know what the terminology to use, but those that are of lower incomes, let's put it
Uh-huh.
that way, or from underrepresented, disadvantaged backgrounds, are often those that do not take out life insurance policies, often because they don't even understand the main benefit of these policies and you look, I hope my mum won't kill me for this, but I remember there was a time where we saw an advert on the TV about life insurance, and I told asked her if she had life insurance and whether she should consider getting one. And if you're African, you've probably heard this saying before. So I'm Ghanaian, but it's actually a Nigerian saying. So I'll say it very quickly, and I'm sure some listeners will be able to relate to it. She said, Tofiakwa, which means, whichever means never, like, or something like over my dead body kind of thing. And it was almost like, oh, do you want to kill me? Do you want me to die? Is that what you're saying? If I get life insurance, it means I'm going to die straight away, or something like that. Right? It's this superstition. So there is a specific, unfortunate mindset when it comes to products like life insurance, where I don't know where it comes from, but people just don't get it because they're not very well educated about it. And unfortunately, also what you find is those who have an income and an expenditure, but the income is not high enough to
Yeah,
cover all their expenditure. There's often not enough room in the
yeah.
budget. Also they believe, or in terms of priorities, to actually fund the premiums that are required to actually pay for some sort of insurance policy.
Yeah, that's obviously a large reason one can imagine as well. But yeah, the superstition side of it is a real thing as well, man. So no, okay, no, that's interesting. And I guess when it comes to insurance, I mean, you've mentioned one or two names and stuff. I think like life insurance. So maybe let's start there actually in
Yeah.
terms of the free insurance products that everyone must consider. I think again these are one of those things where I generally feel most beings of a particular age have heard of life insurance, but just because you've heard of it doesn't mean you actually know what it is. So, maybe for that listener who might need a reminder or maybe a bit of context, what is actual life insurance?
Yeah, okay. So I think the best way to probably describe it in simple terms is to compare it to insurance that other people understand, like car insurance, which is essentially as you drive, you need car insurance. Here in the UK and across the developed world, it is non-negotiable. It is compulsory. Or is it compulsory or mandatory? I always forget the two words.
Mandatory.
It's
Yep.
mandatory. It's not,
Yep. Yep.
it's not compulsory. It's mandatory.
Unless you want to be breaking laws, you know?
Yeah, you are mandated, let's put it that way, to actually have car insurance before you drive. And that's to ensure you in case you get into an accident and then the insurance policy will help you sort out the car, etc., or the other person's car. So essentially that's what it is. When you take out life insurance, you are insuring against your life. Now, that doesn't mean that if you pass away, the life insurance is going to bring you back to life. That's not how it works. But what a life insurance policy does is if you pass away within a specific time frame, and sometimes not even in a time frame. So I'll talk about two different types of life insurance policies. If you pass away, then the policy kicks in and it often pays out a lump sum of money to what we call your beneficiaries. So let me give an example because examples are the best ways to learn. If I want to take out a life policy to protect me and my family, or someone wants to take a life policy to protect him or her family, they can choose a time frame for which they want to be protected for. Let's call it 30 years. So they will choose a time frame of 30 years to say, hey, if I pass on in within the next 30 years, then the life insurance policy will come into play and it will pay often a lump sum of money to my beneficiaries. Who are my beneficiaries? My beneficiaries in this example will be my family, wife, and children, for example. Okay. Why would I want that? Because I will not be here any longer as the main breadwinner, for example. Okay. So that's what life insurance policy is. In order to be able to take this out, you would need to pay what we call premiums, and premiums essentially is often a monthly cost that you will pay in order to have this policy in place. So that's how it works. In terms of how much you pay, there is some analysis that takes place. Often they will look at things like your lifestyle, your weight, whether you smoke, and these your past medical history. All these kind of things will be taken into consideration. And then once you've answered those questions, there will be an underwriting that takes place, and then the what we call the life office, which is basically the business that gives you the life policy, will tell you how much you need to pay in order to take out the life policy. So that's how it works very simply. You pay your premiums, could be as cheap as £10 a month, even cheaper sometimes. It could be expensive depending on how much you want, depending on your lifestyle, depending on your medical condition. And the reason why they do that is because the life office obviously is taking a risk by
Mm.
insuring you, right? Think about it. It is in their best interest that you live past a term, right?
Hmm.
So if you are protecting yourself for 30 years, then it is in the life office's best interest to have you still alive after the
Yeah.
30 years so that they don't actually have to pay out that big amount of money to you and your family. Or your family, basically, for example, right? So it is in their best interest. It's also your best interest to stay alive, but
Yep.
let's say you don't, then your family will be covered. And this is why we call it life cover. It is a form of protection for you and your family.
Yeah, it's yeah, it's quite interesting because obviously, and if they do realize, that's why they look at things like your health, your age, because if they do realize you're more likely to have an illness, or if you already got an illness, develop further, God, unfortunately that end comes, then they'll charge you more because they want more of that money in that term for you when you are around. If that makes sense, they're
Yeah.
obviously a business themselves.
Yeah, absolutely. And also look at things like mortality rates.
That's it.
So
Yeah.
yeah, they pay attention to what the average person is, how the average person, how long an average person will live for, which is why it's also important to really think about taking life cover as soon as possible, because the
Mm.
later you wait, the older you get, the closer you get to the average life expectancy, which means they're likely to charge you a higher premium in order for you to take out the life insurance policy. So yeah, these are the ways they calculate it. As Peter said, this is a business, and essentially they are trying to profit maximize. And I think the terminology is cross subsidization, which means, of course, there are going to be people that pass on within the time frame of their life policy. But by their calculations, which I believe is often done by an actual or something like that, by their calculations, the people that live on, which is actually the majority of people that live past the term of the policy, they're the people that actually subsidize the
Mm.
people who pass away within the
Mm.
time frame of their policy.
As I say, insurance companies, they are here to stay from an
They're
investor
here to stay,
perspective.
and
But
they are
anyway,
cash cows. They
their
make
cash
a
cow.
lot of money, and
Their
so
business model is, yeah,
their
fantastic.
business model is fantastic. And if you are an investor that likes dividends, a lot of insurance companies pay very handsome dividends.
Of course they do. Now, on that note, Jats, actually, usually, I mean, you gave an example. Usually, when people take out life insurance products, I can imagine if you was to look at stats at the point at which the majority of people across the world who have access to life insurance products take them out is when they're about to take out a mortgage on a home,
Yes.
because that's the asset that they are, protecting against. Should they pass on, should they die, and they need a payout for their family, etc., keep the mortgage going, all of that jazz. Is the given that that's the stage, can people who maybe don't have a mortgage, who are a bit younger, but still an adult, can they consider things like life insurance if they still don't have a big asset to protect?
Yeah, absolutely. I think you obviously have the conversation. Now, if you're dealing with let's say a mortgage broker, most mortgage brokers will of course, as you said, when you're buying a property, that's something
Yep.
that they would, encourage you to take out as well. And they can broker that for you as well. Or broker that, sorry, for that for you as well. But if you are younger, you could definitely seek out your own sort of term life insurance. Notice I said term life insurance, which is an insurance policy that protects you for a specific term. I do want to say that there are different types of policies out there, and you can be quite flexible as to the type of policy you take out. So if you are younger, you may want to get some sort of policy that that could be converted or that could be extended without them having to check your health again. All these things are available. But I think to answer your question, Peter, yes, absolutely you can at least have the conversation with a life office, or you can go on a website like lifesearch.com, I think, or if you just Google life search, I believe you can definitely find something there. So I would encourage young people to most definitely, in my humble opinion, to definitely look to take out life insurance as soon as possible. Why? Because the premiums will be much, much cheaper the younger you are.
Love it, love it, love it. And obviously on these products, there's lots of terms and conditions.
Yes,
For
yes.
example, I think certain products, if you pass away in the first year or so, they won't make a payout or anything like that. Stuff like that. There's lots of terms and conditions that you just need to be aware of and research. And whoever you're speaking to will be, educating, well, supposed to be educating you on this as well. So no, that's, yeah, really interesting stuff, man.
Yeah, yeah. And as I said earlier, it is likely that if you work for a corporate, often a big corporate, that you would have some level of life insurance policy with that company, which is fantastic, especially if you plan to be with that company for a very long time, like our predecessors used to, where they used to work for one company for 30, 40
Mm.
years before they retired. But as we all notice and know, we don't stay in the same company for forever. And so it's important to understand that when you do leave that company, that life insurance policy stops. And that's
Mm.
why I think it's really important to really consider taking out your own
Mm.
life insurance policy outside of what you have within your job. And as I said, if you
Mm.
are self-employed, then it's up to you.
Yeah, no, absolutely. And before we go on to the second insurance products that we feel everyone should consider, just to give a bit of flavor, Jats, because I think sometimes, again, another deterrent around insurance products is the cost. And for you to find out the cost, you have to do all of these different bits of research and stuff, and it's obviously personal to your circumstances. But again, it can vary. But I know of, people paying as little as £9 a month, to up to £28 a month, for example. So
Yeah.
it can really vary. It could be much more than that depending on one's condition. But just to give a bit of flavor for our listeners as well, in case you're wondering, but roughly how much may or may not be paid.
Yeah, you're right. You're right. You've hit the numbers on the head. And like we said earlier, there are different types of life insurance policies out there. It also depends on your conditions. It also depends on how much you want the payout to be. And we won't go into that much detail on this episode. But as I said, there are different types of life insurance policies. I'll give you a very simple example because we've already kind of spoken about it. most mortgage lifetime insurances, we call these decreasing life insurances. And just to explain it very quickly, and why these are often the cheapest form of life insurance is because you are insuring against a liability that's actually going down, right? So you have to remember that every single month that you pay your mortgage, if it is a repayment mortgage, the value of the debt is going down anyway, which means you are actually reducing the risk for that life insurance company. For that reason, they will only charge you a small amount of premium because they know that the longer you live, the less they have to pay out should you pass away before the term. And that's why that's a very cheap form of life insurance. The other very cheap form of life insurance is just normal term insurance, where you just choose a term, let's say 30 years, and it will protect you for that 30 years. It's often, again, a very cheap and often the most common type of life insurance as well. And then there are more expensive life insurance policies, which I think are more suitable to quite wealthy families, and they often use it for things like inheritance tax planning.
Hmm.
Where we talk about things like whole of life insurance as well. So yeah, always important to understand the different products available, but it can be as cheap as even £7 I've seen before
Hmm.
as well.
No, I love it, love it, love it, man. Hopefully that's given our listeners some flavor, some flavor. But now, Jats, let's go on to the next insurance product that, everyone should at the very least consider.
Yeah. The second one I think everyone should consider is income protection insurance. So life cover, when we talk about life cover, we'll talk or life insurance, sorry. That's to protect you should you pass on and you want your beneficiaries to have a lump sum of money to help them either pay off a mortgage or to just, set them on their way for them to really be able to look after themselves because their main breadwinner or a breadwinner has left. Even if you're not a breadwinner, you can also take these policies out because you want to leave a gift, something that can help even pay for your own things like funeral costs, etc. Okay, so that's if you pass on. What if you become incapacitated, if that's the word, or if you have ill health, some sort of disability, but you don't pass on? You're still alive. You're still alive, but you can't work.
Mm.
That's where we bring in the income protection insurance, right? Income protection insurance. And the misunderstanding about this product, which unfortunately is often the case, is that people think income protection insurance is some sort of insurance that protects you if you become unemployed or
Mm.
if you are
Made
made
redundant.
redundant. Yes,
Yeah,
yes,
yeah.
that is not what income protection is. You can get things like universal credit, also job seekers allowance, etc. Those things are state benefits that will look after you. That is not what income protection insurance is. Income protection insurance is there to help you continue earning an income should you become disabled to work due to some sort of ill health or incapacity or health condition. And that's why it's extremely important. Some even will say that it's even more important than life insurance. And the
Mm.
reason why some people say it's more important is because you're still alive.
Yeah.
So you can imagine the frustration of not being able to generate the income that you once used to. Now, the truth of the matter is, income protection does not cover you for 100% of what you used to get paid. And that's to encourage you to get back to work once you start to feel well. But it would cover you for at least 50 to 60% of what you used to earn.
And again, I mean, again, when you do the calculations and the research, obviously, the more it covers you, the more you have to pay and all of that jazz. And yeah, and again, terms and conditions. I think some products may say, if you become ill in the first month or so, they won't pay you nothing. But after a month, that's when they'll start paying you all of
Yeah,
that jazz. So
yeah,
there'll be lots of different terms and conditions around it. One can
yes.
imagine.
Well, absolutely, yes. And they would normally do like a period of assessment to make sure that you are clearly unable, sorry, to actually, go to work. And as I said, there's different types of income protection insurance as well, and they may protect you for different things. So it could be that, hey, you can return back to work, but you can't return back to work in the same capacity that you used to. Then
Mm.
there's a specific type of insurance for that. Or maybe you can return back to the work that you used to do, but you can only do it part time. again, there's a type of insurance product to protect you as well. So yeah, with all these products I've mentioned, I've given you the plain vanilla examples, but they can be quite bespoke as well.
Yeah, exactly. And I think you, and even things like increasing, decrease, or whatever. So I think some of the products they might increase in line with inflation, for example.
Yes,
So
yes,
what you're
correct.
paying now, you might be paying more next year because of inflation and stuff.
Exactly, exactly. And of
Yeah.
course, the more attractive it is in terms of, like, for example, increase with inflation, the higher the premiums.
Yeah, and again, I don't know how true this is because I haven't compared the two. But from my experience, income protection, the monthly payments tends to be a bit more than life insurance payments. But again,
Yes.
I don't know if that's everyone's experience.
I think that's true.
Yeah,
I think that's true.
okay,
Yeah,
yeah,
yeah, it has
yeah,
to be true because of risk, right?
yeah,
Because again, most life insurance is term insurance, which will protect you up to a certain period of time. So the example I've been giving this whole episode is 30 years. Most people will not cash that in because most people will live up above that time frame,
yeah,
right? However, with income protection, it's much more likely that you'll get
yeah,
sick.
yeah. Damn die.
So
Yeah.
yes, yeah, exactly. It's more likely that you get sick and still live. So they price in that probability.
Yeah, and again, there's loads of obviously insurance company that provide this stuff, and what you tend to find actually, the insurance company that are providing these products, they get attached onto other benefits as well.
Yeah.
So without mentioning names, I know if you take our product with them, you get access to other health benefits like I don't know,
Yes.
dental care, all of that stuff, gym memberships, all of that stuff. So there's lots of it's interesting when you do research against different income protection products as well.
Yeah, Peter, and I think for what in terms of my belief is this type of insurance is extremely important for those that are self-employed.
Mm.
Because you know if for whatever reason, let's say you're self-employed and the job that you do is quite laborious, where you're
Manual
required to
labor,
manual
construction,
labor,
all of that stuff.
construction,
Yeah,
absolutely, you're very much more likely to experience some sort of injury or health condition that stops you being able to do that thing for a period of time. That's where income protection kicks in. So I think personally, that it is extremely important for self-employed people to have this sort of insurance product. And again, as if you are an employed individual with a big corporate, chances are you have some level of cover in the form of statutory sick pay. But it's also important to understand that it may not be enough for you. So you can also consider taking up income protection insurance.
absolutely. Cool. No, thank you for that, Jax, man. Super interesting. Hopefully, just as interesting, if not more, for our listeners as well. Now, Jax, before we go on to the final insurance product that everyone needs to consider, we're just going to give a shout out to where we're getting listeners from in different parts of the world. And this area is called Burlington, which is a city in Canada.
Oh, fantastic. We've had a few listeners in Canada. As I said, I've been to Canada once. I was in Toronto and I was there at the time. I believe it was either 2018 or 2019, but I believe the Raptors basketball team won. I'm not a basketball fan, Peter, so you can tell me if I'm right, but it was the NBA tournament. They won, and it was so amazing to be in Canada at the time where they had actually won, and I believe they beat the Lakers, if I'm correct. Welcome to the Woke Finance Podcast. You were here with myself, Jax, Peter, my co-host, and on this podcast we talk about all things finance and all things finance related. And if you want to know more about what we do, because we do more than just podcasts, we serve in the community, head over to www.wokefinance.co.uk. That's www.wokefinance.co.uk. And we are on social media as well. So if you want to find us and engage with us, we are on TikTok, we are on Instagram, and we are also on LinkedIn. If you search for Woke Finance, you will be sure to find us. Welcome to the episode. I hope you were enjoying and gaining tons of value.
Come on, come on, come on. A massive shout to our listeners over in Burlington, Canada, and all over the world. We see you, we appreciate you. And yeah, just a massive thank you. Now, Jax, what's the third and final insurance product that we feel people should consider?
Yes, so the third and final insurance product that I think everyone should consider is what we call critical illness cover. Critical illness cover. Now, critical illness cover differentiates itself from the other types of insurance products we've already spoken of because it pays out, firstly, it pays out a lump sum, which is quite similar to life insurance. It pays out a lump sum, but it doesn't wait for you to pass away before it pays you, right?
Mm,
And it pays you based on specific conditions. So the three that pop straight into my head are stroke, a heart attack, or being diagnosed with a cancer. These three are often the most common conditions that if you contract, then critical illness will pay you out. And what I haven't said about these different insurance policies, particularly life insurance and critical illness, is that they are tax-free. They pay a
mm,
tax-free amount. And so it's really important to understand what critical illness is, why it's beneficial, and why there are many, many stories of people that have contracted, let's say, or have experienced a stroke or have had a heart attack, and they've received hundreds of thousands of pounds as a payout, and they've recovered and they've continued to live their life, but
mm.
now they've had this big lump sum of money to pay off their mortgage, or they've used it to do some amazing stuff, and they've continued to live. So critical illness is the third and final type of investments, life insurance policy or insurance policy, sorry, that I think people should consider. And often, what I should say is critical illness is often a type of insurance policy that is often pegged to the other ones. So it is very, very common for people to take out life insurance and have critical illness with it. That's how it often works.
And again, you need to read the terms and conditions. Not
Yeah.
just this, but even on the, as you said, on the other products, particularly life insurance, you will find an element of critical illness. Sometimes, again, the critical illness might be for specific types. I know you gave three examples, but they'll be quite strict on those
Yes.
illnesses and they'll name them by name in the policy.
Absolutely. I'll say probably critical illness is the one that you have to be extremely mindful of the conditions for which it will pay out. Because and also is the most expensive. It is the most
Yes.
expensive policy, and similarly to what we were just speaking about, it is the most expensive policy because it's the one that's most likely to happen. And so that probability is priced into the premiums that you will pay. In terms of numbers, I know quite a few policies that will start off with like at least £30 per month. I'll probably go north of there. So, yeah, critical illness is definitely a policy that people should consider. I know it's quite common for people that have businesses to consider. And what I mean by businesses, what I'm talking about is people that have multiple owners of a business, or they may have a very high performer. So the two other insurances I wanted to just throw out there is something called key person cover as well. And what I mean by that is if, for example, myself and Peter are co-founders of Walk Finance, and one of us falls very, very ill, it could be quite detrimental to the business. And so we can take out some sort of insurance policy that will help us to fund the financial loss of someone not being able to run the business like they used to. So that's why we have things like critical illness, and that's why a lot of businesses take that out for their key persons.
You are wishing illness. I rebuke you. But that's the mentality you come from, my bro. That's
Yeah,
the
exactly.
mentality in terms of household and background.
Yeah, you're getting critical illness coming from me. How do I know you're not gonna slip something into my juice and all of a sudden get a payout, right? These are the mentalities that we need to abolish with
Yeah.
immediate effect.
Mad, mad, mad. But no, man, so important, man. So important. And I think we mentioned at the beginning, whenever anyone is on a personal finance journey, there's key things we need to consider, and insurance is a key thing. It's often overlooked and put to the side. And as you said, it's the one thing that we hope that we wouldn't ever have to take out and use. But it's just such an important thing for anyone that wants to get on this personal finance journey, man.
Absolutely, absolutely, Peter. And as we wrap up, what I would say is, look, there is forms of self-insurance. Our number one form of self-insurance is to have savings and to have an emergency fund. So we call that self-insurance. But again, if you speak to any regulated financial planner, what they will say to you is aside from savings and managing debt, the bedrock, the foundation of your personal finances and as you build wealth is to have life insurance. There's no point building huge investment portfolios, properties, businesses, etc., where you don't have the protection should somehow your income just stop. Or unfortunately, if you pass on, then what happens onwards from there? So it is really important that as we go on this journey to build wealth, that we set the foundations properly. What I would say is you don't have to have every single type of insurance available, but I do, in my opinion anyway, there are specific insurance products that you need if you fit the bill. One is if you have a family and you have a mortgage, for example, then it is, in my opinion, and I believe Walk Finance's opinion, that you should have life insurance to cover you and the mortgage and your family should you pass on within a time frame. And then the other one, in my opinion, is if you are self-employed, then you need income protection as well.
And is it fair to say, Jax, on the first bit, you said in terms of if you have a family or have a mortgage, can you also go a bit beyond that and say if you plan on having a family and
Oh,
plan on
yes.
having a mortgage?
Oh, fantastic. I love the fact that you mentioned that because, yes, if you plan to have a mortgage or
Mm,
if you plan to have a family, especially, then actually, like I said earlier, the earlier you start, the better because the
mm,
premiums are much cheaper. And so,
mm,
if it is your desire to build a family in the future, then absolutely you should get life insurance as soon as you can for a decent period of time. And what I would finally say on this topic is even if you don't have a family, but you have people that can benefit from
mm,
a life insurance policy, then I think you should take it out anyway, in my very humble opinion. Should you pass on, this could be and probably is the best chance that a lot of families have of building generational wealth.
mm.
And so definitely think about that. A final addition to this topic area is most people, if you are employed, will have a life insurance policy anyway. But what I would say is make sure you go into the life insurance policy and you do something called an expression of wishes, right? Because we want to actually know where the money should go if you should pass on. You can go in there and you can do it in percentage terms. You can get 10% to your I don't know, your friends if you don't have any children, your family members, auntie, uncle, niece, nephew. That's all done through something called an expression of wishes, which unfortunately many people don't do. So that's the last thing I'll say on that.
So that's an action for you there. If you have any form of particular life insurance product, go and do that. Go and do that. So you can update it. It's usually free, and you just go online and do that. Talking of online, Jax, I think you mentioned platforms like LifeSearch. Anything else in terms of next steps for people that maybe want to go about considering and taking out a product?
Yeah, absolutely, Peter. So first thing is if you're employed, see what you have at work. So we talked about things like statutory sick pay, find out how much you actually get and for how long. Get login details with the life office that your company's potentially using for your life insurance policy, and do your expression of wishes. Ultimately, you want to understand what can happen within what circumstances. So if you got sick or you were incapable of working, what things do you have in place to help you to continue to fund your lifestyle and your family's lifestyle? And if you were to pass on, again, how do your family benefit and who actually gets the proceeds of any policies that you have as well?
Love it, love it, love it. There we have it. Free insurance products. Everyone should or must consider at the very least. Thank you very much for that, Jax. To our listeners, remember all,
Say
stay woke.